Bajaj Electricals, they've reported second quarter numbers today. Let's discuss the quarter gone by with Mr. Anant Purandare. He's the CFO of the company. He joins us right now on the show to talk about the quarter gone by and the outlook ahead. Mr. Purandare, thanks so much for joining in. Sum up the quarter for us. How did the quarter look operationally, and how was the performance of the EPC business? Because from the looks of it, the numbers have looked very strong on that front.
Yeah, I'm really happy to share the performance of this quarter because there is a substantial growth in the top line. We achieved around 1,598 crores as against last year. This quarter was 935 crores with the growth of 71%. Even there is an improvement in profitability. If you look at PAT level, our profit has grown by 79.6%, which is from 18 crores to 34 crores in this quarter. And both the segments are doing good. The consumer product segment is growing by 25%, and the EPC is growing by around 127%. That is because of the orders what we got for the UP projects.
Anant, the other part I wanted to ask is what constituted the big jump in this EPC business? And secondly, if you're looking at it, the margins are not the best because considering what you did in the July quarter, you did some 3,300 crores operating profit on your EPC business on a top line of 5,400, on a top line of 542 crores. This time around, it's 40 crores on almost close to almost on a close to 1,000 crore top line. So the margins haven't increased much on the EPC side.
Right. Correct. Your observation is absolutely right. First quarter performance was very good as compared to this quarter. Basically, the consumer product margins are down because the input prices are gone up, and we have not taken the price increase in the second quarter. However, I would like to say that we have taken the price correction or price increase in the third quarter. So obviously that correction will happen in the third quarter. As far as the EPC margins are concerned, obviously though the top line has grown, but the EBIT margins are not expanded as compared to the top line because the orders what we have taken in the UP, their margins in comparison with our other projects are little lower side, and that's why though the top line has increased substantially, the margins are not expanded. But however, on absolute number, it is a good performance.
Saying that this top line increases only on account of one single project in the UP, and by in the third quarter this number won't come in on the EPC side?
No, this is not a no, it's not a single order. There are 16 packages. One is Madhyanchal and Uttaranchal. There are two parts in the UP that the projects are going on, and there are different packages. So power distribution is a major contributor to the EPC turnover. There are other EPC segments which are like a transmission line tower and luminaires and illumination. But obviously the major top line is driven by the power distribution, and this order will have to complete in next 6 months. So current order book for my power distribution is 5,800 crores, and for transmission line tower it is 1,280, and high mast and street light is 220 crores. So total order book what we have for the EPC is 7,300 crores.
And I would reckon that because of, I remember the conversation about a couple of quarters ago when you bagged these orders, and Mr. Bajaj had said that a large portion of these orders will have to be finished before the elections. So I'm guessing that the top line growth for the next couple of quarters, primarily because of the UP orders, would be high for the company.
Absolutely, you are absolutely right. And we are expecting to close EPC by year end around 4,000 crores with the growth of 60% as compared to last year. And as far as CP is concerned, we are expecting the similar growth to continue. Rather, it will be a little better in the second and third quarter, considering Diwali, winter, and then summer product. I think we are expecting to grow at 30-35%. So we should close CP at around 3,000 crores. Overall, company should do around 7,000 crores in this financial year.
And are we to presume that because of the slightly lower margins on that, the EBIT margins, blended EBIT margins, would be in line with what you've done in this quarter?
As I mentioned, CP margin we are expecting to improve Two reasons. One
Yeah,
is
but
that
the larger
we are taking
portion
the
would be
price
the
increase
EPC, right?
across the product except lighting. Right, but as I said, the CP is growing at around 30-35%, and that is also a substantial share in the top line. And third quarter and fourth quarter, the product mix is in favor of a better margin. As far as the EPC margin will concern, those will be more or less in the same range.
My final question, leave us with some guidance of what you will do for the year. You mentioned briefly how the top line from each of these businesses could be for the end of the year, but top line, maybe margins, and maybe a bottom line estimate of what you would do in the year FY19.
That's what I said. If everything is as per our plan, the CP margins has to improve at least by 100 basis point, and EPC margins will be in line with what has happened in this quarter.
Top line, bottom line guidance for the year?
Yeah, top line as mentioned, total 7,000 crores.
Bottom line?
CP to grow at 30-35% to clock 3. Bottom line, obviously there are various things, interest are the same, but I think it should be obviously far better than the last year.
Okay. Yeah, well, that's probably evident from how you've done in the first couple of quarters itself. Congratulations on a good quarter, and thank you so much for joining us and speaking to us, and all the best for the quarters ahead.